Art Collins here. In a recent video, I did a live walkthrough optimization study on daily bars, 2020 time frame only. Art, why do you want to do that? Gives you a really small sample size. That's probably not reliable. I just still want to know what the characteristics are of the market that I'm in now. Okay. 2020 virus market has unique characteristics, particularly large ranges in volatility. We're roughly traversing 10 points about the way we were doing one or two prior to this. So we walk through a live optimization in daily bars, day session only, 8:30 a.m. to 3:15 p.m. Central Time. And we came up with a system that I'm going to augment now with some additional filters. The original filter we had was if at 8:30 daily opening price is higher than the previous close, buy at the open plus 15% of the average 3-day range on a stop. Or conversely, at that time, if the opening price is lower than the previous close, sell short at the open minus 15% of the average 3-day range on a stop. And this was just a raw study, no stop losses or anything like that. Just get in the trade and out of it at 3:15 p.m. Central Time. And this is what we came up with. Again, a 4-month study, and you're doubling, tripling, and more on your account size had you started with your worst drawdown amounts. Again, that's interesting, but view it with caution. We do have a small sample size. Let's look at a second filter. We're going to use the same idea of buying and selling 15% of the average 3-day ranges above and below the daily open. The new filter says you do so if today's close is less than yesterday's close. So we're fading net changes for this second filter. Or conversely, if today's close is higher than yesterday's close, sell short at the next open, minus 15% of the average 3-day range on a stop. And you kind of got similar results as you do with the first filter. A little harder to get trades, so you got less of them. So then the logical question is, what happens if you combine them? Can we get a whole, W-H-O-L-E, that is greater than the sum of the parts? So what your coding would be telling you is buy next open plus 15% of the 3-day average range on a stop if the next open is higher than today's close and if today's close is lower than yesterday's close. Sell short next open minus 15% of 3-day average range on a stop if the next open is lower than today's close and today's close is higher than yesterday's close. Exit at 3:15. Keep your eye on the bouncing ball. What you see here is, again, the trades are weeded down to, proceed with caution. But you do get a spectacular jump in the return on accounts. And this is kind of in line with what I have frequently shown, that you can combine filters and qualifiers to get results that are significantly better than the results you would have gotten if you just would have added things together. So your takeaways are the The coronavirus environment is particularly volatile with huge daily ranges. We've gotten positive results by buying and selling 15% of the 3-day average range above and below the daily open. One filter for this idea is going in the direction of the open relative to the previous close. In other words, buying if you're open, I should say following the signal only if the daily open was higher than yesterday's close. For buys, go short only if the daily open was lower than the previous close. Second filter, going long following down days and short following up days. So you got one filter that tracks the direction of the open. You got another filter that tracks the net change. Going with the open, that's a go with indicator. And the close indicator is a fade indicator. You get holes exceeding the sum of the parts by combining the two filters. But again, caution is urged in that the number of trials we're looking at is very small. By the way, I did run that second filter in the S&P on the usual 10 years that I look at, and I'm sorry to say it did not hold up. Got a negative result overall. So keep that in mind too. Hope you check this out. Visit me at artcollins.com, artcollinstrading.com, and thanks for joining me.